Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Julian Emanuel is Chief Equity and Quantitative Strategist at Evercore ISI, weaned off of Edward Hyman, and he joins us here this morning. I actually read your note this morning. Usually I skim them. Oh, Julian, Julian. I actually read the thing. Can you make a determination with only 9% of market cap in? Is it just still too early?
It's difficult in general, and it's one of those ones where, like, the financials tend to skew things, and then it gets reversed later on. But look, there's every indication, as has been the case the last several quarters, that earnings are going to be strong, and the surprise element gets you to low double digits, which, you know, frankly, in this environment, you need there to get there because the expectations are that high.
My theme with Michael Barr yesterday, which he wrote up, is, look, this is where nominal GDP is. And in paragraph 3 of your wonderful note, I mean, you don't write the note. You got a team of people that write the note, right?
My team.
That's what I know. This is what I do.
My team gets all the credit.
When I see a research note, Tom, and I see 4, 5, 6 authors, I go to the last one on the list. That's a person I call. Right. I know they're the one that wrote it.
Is it revenue driven? Is it buried in your wonderful paragraphs? It's about revenue getting to that double-digit earnings.
Well, that's the thing. I mean, if you look at the general trajectory of revenue growth versus, you know, sort of right after the pandemic, but pre-pandemic, it's much higher. And that is reflective of Atlanta Fed GDP clocking in the neighborhood of 5% right now.
Julian, I like your 2026 outlook note here. What could surprise in 2026? What are some of the things you think people should be on the outlook for in terms of surprises?
Well, the surprise was number 7 on the list. The potential for the U.S. taking control of Greenland.
Okay.
We in retrospect, we put that note out Sunday morning. We'd probably bump that up a couple of places. I would say what's interesting now about the setup is that you had all this angst around debt financing, around the AI build out at the end of last year. Credit default swap markets getting stressed, certain hyperscalers share prices getting stressed, to the point where there's enough skepticism around the AI story and technology in general that in our mind, it's almost sets up as a contrarian play. And we're very excited by that.
So, I mean, we kind of came into Davos thinking that AI might be the discussion point for the week. That got thrown out with, and now it's all about Greenland and tariffs right back. It's almost like we were April of last year here. How much of a risk is that to the market? Or can this market just, as it's done in the past, kind of look through it, maybe?
Well, so again, this is one of the, you look at the last 3 years, a lot has been thrown at a market that is being driven by the secular growth and productivity bump potential of AI. But again, we're in the 4th year of this bull market. It should be more volatile. And our view was the aberration is there was too much complacency to start the first 2 weeks of the year. That's over.
I mean, your advantage is you're working with the economic combine of Evercore ISI. To be clear, you guys nailed no recession. When you look at the data that you're famous for, like trucking and railroads and all that, do you still have American GDP to drive revenues and drive earnings?
Absolutely. In fact, the company surveys hit their highest level since very early 2024, just this last week. Things are moving along in the right direction. And the econ team raised their forecast to 2.5% GDP for 2026. And I would say that even at that number, the bias is still to the upside.
First thing I did today, Paul, is I looked at the NASDAQ futures and the drawdown. It's like negative 6%. It's like we've cratered. Folks, I'm kidding. I'm looking at Standard & Poor's 500, and coming off the debacle last April, we legged up one leg, 2 legs, and then off we went to the races. Do you see the same thing this time, that we've got Greenland angst somehow it will get solved and we'll have a multiple leg up and a reaffirmation of a bull market?
We think it's going to take a little bit more patience this time. So if you think about it, one of the extraordinary things is that, for instance, the February to April leg down last year happened so quickly that unless you were an active manager at a hedge fund where the risk manager tapped you on the shoulder and said, lighten up, you did nothing because it happened too quickly. And in fact, the public was a buyer the whole way down. We think the way this year unfolds is you're going to have, this is the first bout of what we think is higher volatility. There will be multiple bouts. And the key here is going to be patience and sticking to your knitting and having the cash to deploy, down 5 and down 10, which we think we might see multiple times on the way to 77.50 by year end.
With us, Julian and Emanuel, Evercore ISA. We welcome all of you here to the Lisa Mateo Hour. Bloomberg surveillance worldwide across the nation. Lisa Mateo, Michael Barr, Paul Sweeney. We're all back together. It's amazing.
Sure. Yeah.
Are we having any group lunch today?
Oh, I don't know. We should.
McDonald's, 3rd Avenue?
Exactly, 3rd Avenue.
That window seat in this cold is just really remarkable. We say good morning with our coverage from the World Economic Forum as well. Lots of people. Howard Lutnick, I'm told, will be with us tomorrow. Other worthies here today, including the leadership of Morgan Stanley. The way you listen to us, thank you. Nathan Hager Radio, 99.1 FM in Washington, 92.9 FM, good morning in Boston, Bloomberg 1130 in New York. And on YouTube, I just can't say enough, folks, how I'm learning about this digital experiment each and every day. Subscribe out at YouTube to Bloomberg Podcast. That's what Julian Emanuel does.
Yep.
Paul Sweeney with Mr. Emanuel.
Julian, what are we doing in the bond market here? 2025 was a really solid year for bond investors, high single-digit total returns here. Are we just clipping coupons maybe in 26?
I think it's a little bit more complicated here.
Okay.
Look, first of all, if we knew nothing else, the idea that Japanese yields are exploding and that increases the global competition for capital, it has to put upward pressure on our yields.
Right.
Again, lots of expansion plans, getting involved in lots of other countries and territories, all of that, plus the midterms. There's going to be fiscal expansion.
Brilliant. We're going to stop the show right now, folks, because this is the research item of the moment with all the comments from the Secretary of Treasury yesterday. Julian, I'm in the camp, as you just stated, that and even Liz Ann Saunders at Schwab said 7 standard deviation move in Japan. All you need to know, folks, is the word big, B-I-G. A big move, price down, yield up. It does affect American finance. The Greenland, the Davos, the president, what's he going to say? Mark Carney's magisterial speech yesterday, does that affect the finance world as well?
Absolutely. At the margin, all of that creates more volatility. And again, in a world where we have to face it, the 40-year secular bond bull market ended in 2020, and we're in a new higher yield regime. And we've gone sideways for 3 years, and that's likely going to end.
Stay with us. Have a Tito's and Tang. Ed Hyman just called in and said, enough of Julian. We got to get to Lisa Mateo. Right now from the Interactive Broker Studios, a Bloomberg Business Flash. Lisa Mateo.
You got it. We got futures. Well, they're still lower. This after yesterday's sell-off. Traders just awaiting President Trump's address at Davos. Any signs that tensions might cool over Greenland? He's expected to talk at 8:30 Wall Street time. We will keep you updated on that. We go to NASDAQ futures down 0.3%. Dow futures falling 0.2%. S&P futures off about 0.1%. In the yield space, the 2-year 3.57%. That's down 2 basis points. The yield on the 10-year 4.28%, and that's down 1 basis point. To currencies, the Bloomberg Dollar Spot Index weakening by about 0.1%. More earnings coming in. We're just hearing from Charles Schwab. It looks like a beat on total net new assets for the fourth quarter, but its shares are down about 2%. Still going through the data.
Gordon.
A few stocks on the move. We'll start with shares of Kraft Heinz. They are still lower. They're down 5%. Worth its top shareholder, Berkshire Hathaway, might sell some or nearly all of its shares. There's a filing. Kraft Heinz says it's pulling more than 325 million common shares shares of Berkshire Hathaway up for a potential sale. And finally, Burberry's holiday sales beat expectations. Same-store sales growth, 3 to 6% gain in Greater China. It also flagged strong interest from Gen Z. Shares up 4% in London. That's your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Coming up, the senator from North Carolina, Mr. Tillis, making a huge splash in Davos. That'll be a good conversation with Jonathan Farrell. Paul?
Tom, what I like about Julian's notes here, because he has investment ideas, stuff to do. So here's one. Buy WTI oil straddles. I'm ready to do that, but I have no idea what that means. What are we doing here with oil?
So basically, if you think about Iran, there are many, many possible outcomes along the way. And you take the backdrop that of all of the initiatives on promoting affordability, the Trump administration has been uniformly extremely successful in keeping the price of oil and gasoline at the pump down. But Iran could, you could have a spike higher. You could go lower subsequently if there's regime change and it ended up being pro-Western. So basically what we're saying is the oil market is likely to experience much higher volatility in the next few months. And that's the way owning straddles, puts and calls, the way you take advantage of that.
All right, Tom, I'm in on that. I'll go buy some puts.
I think it's, everybody's readjusting here, but I'm sorry, Julian, we're all buffeted by this, it's an advantage for me. People are paying attention. Thank you for that, folks. But how do you manage? Folks, you have to understand the Evercore ISI heritage of Roger Altman and the team and Edward Hyman is a long-term approach. And all of these people astutely watch the news. How do you do that? How do you actually execute a Julian Emanuel approach with the focus that Roger Altman and Ed Hyman have on the day-to-day news?
Well, I think it starts with the concept of thinking about investing long-term, which is why we continue to say, with all this noise, yes, the market's going to be more volatile, but the underlying theme of structural positivity because of the AI revolution is likely to carry stock prices higher. But then the other thing, it just comes down to having the Bloomberg feed coming into on your phone and into your head 24/7. Got to do it.
I got to get set up here for the senator from North Carolina. You mentioned the midterm elections. Where I am in January is we're having an April conversation. We're sort of speeding up the whole discussion. Is that the way you see it?
Look, absolutely. The one big beautiful bill, the tax benefits are going to kick in a month or two. And then there are likely to be more stimuli, more initiatives.
That's Latin. It's like, Bob Michael at JP. Stimuli?
Stimuli, of course.
Okay. Are we going to stimuli ourselves to a Q2 and Q3 double-digit earnings?
The way it looks now, it's entirely likely, yes.
So the earnings story, we're just kind of getting into the crux of it right now. One thing that's kind of, I think, still quite concerning to some investors is the persistent softness in the U.S. dollar. We've seen stocks bounce back. We've seen, a lot of other risk assets bounce back from the April lows of last year. We haven't seen the dollar bounce back.
No. Well, and again, if you're corporate America, you actually prefer a weaker dollar. And so that's good if you're a multinational. But frankly, the other part of the story there, and we talked about this, is the whole asset diversification from this concentration in the U.S. assets. And broadly speaking, over the long stretch, if you look at the last period of dollar weakness sustained, 2001 to 2007, that was a pretty good time for the global economy.
I got to slip one more in here, and then we got to start talking about the senator from North Carolina. You own earnings analysis. You've taken the high ground with a must-read every morning research note. Can you extrapolate out an SPX call? Do you have like a Yardeni out 1 year, even a Julian Emanuel out 2 year call?
It's a little trickier now to go past 1 year simply because when you think about the dynamics of 2026, first of all, just, bull markets don't end on valuation alone. They end with recessions. They end with a hiking Fed. They end with, yields in the 5s or the 6s, which we don't see at this point.
Right.
And they end with a massive amount of FOMO. None of those are in place right now. Could they be? Absolutely, given the fact that you have all this stimulus in the pipeline and a Fed likely to cut into the midterms. Could there be a hangover in 2027?
Right.
We'll have to see. Not our base case, but certainly a risk case.
I need you, Julian. Can you come in like every 10 days, 14 days here? Write your calendar, if you can do it.
We'll talk to these people.
Certainly during earnings season, to give my team the credit, we will.
9% market cap, so 19% when it's in, 29% in. I think it's a good bet. Julian Emanuel, Evercore ISI. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Right now, Jonathan Maxwell, an eclectic set of conversations to prepare you for the president's speech. Jonathan, it's timely. I had a tantrum like 3 days ago, and I said, I don't care. Get me someone with a modern history degree from Oxford. That's what we did. Have you ever seen a modern history like this?
I mean, we've spent the last modern history since the post the Second World War. A lot of it has been about competition for resources, right? And particularly fossil fuels. What we're seeing now is a different arena emerging for where that competition is flaring up. And, I've described it. I wrote a book about this called The Edge. I think we're at a real age moment in history, right. but there are several age moments. These are flashpoints, geopolitical flashpoints, where you find energy and capital coming together and flashing up. Arctic, obviously, is the big one everybody's talking about.
Can I rip up the script?
Sure.
We were supposed to talk about Venezuela. That's yesterday's news. I want to talk to you about the new focus on the Arctic. Right. Americans, like our subtotal, as we watched Ice Station Zebra a million years ago. And I'm sorry, folks, in the continent of Europe and the United Kingdom, they're way more astute on this. When Elizabeth Economy writes in Foreign Affairs about the Arctic Ocean, with that authority, or someone like you with Sustainable Development, with that authority, what's the number one thing my audience needs to know about the myths of the Arctic Ocean?
Okay, so I would say that think about the difference between the ocean and the crust. So what joins Greenland to Russia is something called the Lomonosov Ridge.
The what?
The Lomonosov Ridge.
Okay.
It's where my book starts, actually, in the Arctic. In 2007, Vladimir Putin started to extract natural gas underneath the North Pole.
Yeah, what happens is in the beginning of the book, it's like Stavridis' book, a submarine comes up through the ice surface.
Bless you for having read it. Thank you so much. But I think to talk about something that other people aren't necessarily talking about, there's Lomonosov Ridge, the laws of the sea, by which, by the way, the United States hasn't signed up to, but that anybody within 200 miles can claim the resources under the Arctic. Right. So what are the resources under the Arctic? Maybe 13% of the world's oil, maybe 20 or 30% of the world's undiscovered or unexploited natural gas. Then you've got all the minerals. And then, of course, you've got the shipping lanes. You've got the geopolitical issues. So this is where
submarines.
And you've got submarines. And I think a lot of your listeners who are informed about this may say, wait, this is going to be very expensive. It's very difficult to extract the oil and gas. Sometimes you do things to stop other people doing it. Now, the other people claiming these resources because they claim ownership directly or indirectly of Russia and China. So to some degree, ownership of Greenland, it gives you that nexus to Lomonosov Ridge. Ownership is also, I think everybody's been scratching their head, why do we need to own it if we can put military bases there and help control shipping lanes? There are other things. Of course, you've got the resources. There's also, and this is a little early to be saying this, but of course it's very cool. It's all hydropower, renewable. If you did happen to want to locate a data center there, you don't need to spend a lot of money cooling the thing. So there are geostrategic reasons linked to energy flows, linked to minerals, and also linked to what I would describe as the fifth industrial revolution.
Do we, again, I guess the question that a lot of lay people like myself are asking at this point, given our limited knowledge of the geopolitics of Greenland, do we need to own it, or do we have already access to it as of right now?
I think the answer is, obviously you have access to it right now. You can put military bases there. You've got mineral extraction rights. I think the difference with ownership is what it stops other people doing. Go back to the point that I made before, which I don't think is on the table at the moment in the mainstream media. The Lomonosov Ridge is crust, it's not ocean. The crust gives you geostrategic control.
I'm begging. Can you come back for a lengthy discussion?
With the greatest level of pleasure.
Are you based in New York?
I'm based in London, but I'm here every 3 weeks.
Every 3 weeks.
Ish.
Why are we in London every 3 weeks? We could do that.
Well, a lot of people ask why that is.
Yes.
The bartender at the Net asked me last night, why aren't you in London every 3 weeks?
I know.
This has been Jonathan Maxwell. This has been absolutely just spectacular. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us now, Dana Telsey for Too Short a Conversation, definitive on fashion, Telsey Advisory Group, and retail as well. Okay, I'm going to defend my good friend Maria Bartiromo. She is rocking the Audrey charade look over at Fox Biz. She's got the Oliver Goldsmith sunglasses and the hat, which looks like Cecil, what's his name, from Another Time and Place. And she's getting trashed. I want you to talk about how in fashion a former era becomes a style, like rockin' Audrey over at Fox Biz.
It does. You always need newness in order to show something different that makes people want to emulate, that makes people want to buy, drives conversion. The past is the history of the future.
And the Devil Wears Prada, it's about risk. What's the risk right now? Like Maria's out there getting hung out to dry. What's the risk right now in the Dana Telsey world?
I mean, we've seen a little bit of it with Saks bankruptcy and what happens to all the vendors. You look at what everyone has owned. It's harder for smaller vendors to come to fruition if they don't have places to sell into.
Paul, Isabel Marant is on like $6 gazillion. I mean, serious stuff.
It's big money.
Give us your perspective of Saks and the bankruptcy there. I mean, I'm not a retail person, but I know the value of the Saks brand, and that just shocked me as a layperson to see that happen.
It shocks everyone to see it happen. Most importantly, shocks the brands. And what does it give to the consumers? You know who benefits? Macy's and Bloomingdale's. Go across the street to Bloomingdale's. You look at the 4th floor where they expanded the brands and it looks terrific. Bloomingdale's and Nordstrom's are going to benefit because the brands will have places to sell that they can get paid.
Why did Bloomingdale's not do a Saks Fifth Avenue? Is it execution by retail people over fancy pants real estate people? She's got the Bergdorf Goodman eyes right now from her childhood. She's like, it's about retail execution.
It's about the logic and the magic. They were able to take the brands and the bills, be able to manage it with, yes, the people who manage, frankly, the margins, the profitability, and the volume all at the same time. But it's not easy, and it wasn't always that way.
Right.
But under Tony Spring, they're bringing the bold new chapter to today.
Lisa, we got to interrupt the show here. Should we have a new slogan for Bloomberg Surveillance about the logic and the magic? Would that work? Bloomberg Surveillance. That's great. Paul Sweeney with Dana Telsey.
Dana, we've got a little bit of look back here. How was the holiday selling season for retailers?
Good. Holiday selling season, people are very resilient. We've seen the increases anywhere from 3.5% to just over 4%. There was the lull as usual from Black Friday to Christmas. Then it picked up. And you know what drove it? The fact that a lot of particularly on the apparel side, goods that people hadn't bought before, they were buying, along with they were going out. So it wasn't just as casual as can get because people went to occasions and events.
What are we looking for 2026? What are some of the themes, the trends you're looking for in your retail world?
My line is assortment and advertising drive appreciation. I think the merchandise mix has got to be different, whether it's influencers, partnerships, collaborations, how you're going to capture people's attention, then it'll drive stock performance.
Are the retailers, are they savvy about, all the influencers that Tom, favors on social media? I mean, do they know how to engage with those people?
I mean,
You bet they do.
Man Repeller started it. It's her fault.
You bet they do. I mean, one of the new metrics that companies are talking about on a quarterly basis is how many new customers they captured, and everyone wants younger customers. Today, we just saw it. Look at Burberry. Burberry's results today for the holiday season were pretty good. And the strength of outerwear continued into accessories like handbags because they went to what's iconic for them in heritage with outerwear. And now they've expanded it and did some.
Oh, come on. They went
handbags.
back to basics. Mrs. Keene is rocking the cashmere thing from Burberry.
And don't forget the gabardine also.
The gabardine, whatever it is, they're doing it. Folks, with Dana Telsey with us, and this is a joy to have her here picking up the pieces on retail. As Paul mentioned, the bankruptcy of Saks Fifth Avenue is riveted. Bloomberg 1130 in New York. We're riveted by the World Economic Forum. Just throw up that imagery right now. It's a darkened room at the World Economic Forum. It is a packed room. Again, thanks to Ian Bremmer for images of really, literally, I'm not kidding, 1,000 people, maybe more, awaiting the president of the United States. And we'll bring all that to you worldwide and, of course, on YouTube as well. Does cold weather help retail? I'm in Paris. And like we all get off the airplane, and it's like, OMG, it's cold. And I go to a famous store at 24 Rue Faubourg, and I'm standing there, and all of New York is buying cold weather gear. Is that what happens now in cold America?
Yes, it does. You're seeing it both for outerwear, for scarves, hats, and gloves. Look at today here in New York, 15 degrees with a real feel of 9 degrees. You better be buckled up.
Okay, I'm going to dazzle her right now. Montclair just stole the Bottega Veneta person this morning. You're dazzled, I know
to be
this.
CEO.
I mean, I'm out front of Vanessa Friedman on this. What happens in the machinery? I mean, John Farrell's over in Davos. Did you? Yeah, he's all Montclair.
He's all.
Lisa's going all Bogner.
Yep.
And Amory Horton's Bellman. John's all Montclair. What does Montclair want from someone from Bottega Veneta of Venice?
I think overall you want to keep the heritage of Montclair, but up the ante on what could be unique, differentiated. And look what Bottega does. It creates iconic pieces. There's going to be more icons coming out of Montclair over time.
Luxury in general, how is the luxury market these days?
Getting better. You're seeing China get a little bit better. We're going to hear next Wednesday from LVMH.
Okay.
We definitely want to hear what they have to say. But it feels better. And you know what? It's more important than ever that they have their own stores when you need a stronger wholesale channel.
What did you take from Richemont of Switzerland, folks? This is Cartier. Lisa, are we wearing Cartier today?
Not today.
Okay, Cartier and Van
She's got the
Cleef.
Apple Watch.
I mean, they did well with it all. I mean, the world's coming to an end.
14% increase in jewelry, positive in watches. That's great. And you have new icons for the Love bracelet that, frankly, are sold out. Hello, Richemont.
The distinction is LVMH spends gazillions of dollars, like on the girl from Black, White, and all that. If the celebrity endorsements, does it really work?
Everyone wants to be part of a club, and that's what a lot of luxury brands allow you to do.
All right, how about the other side of the K-shaped economy here? How's the consumer doing
Paul.
there?
Well, look at the trade down that Walmart is getting. Walmart seems to be the strength, and just like we have a ton of changes with creative designers and luxury, look at Walmart and Target, new CEO leaders who come from within and were promoted up the food chain. So that's going to be interesting to see. But Walmart, with AI being one of their very important initiatives they're investing in, they seem to be the modernized Walmart.
So
today.
what does AI do for retail, just broadly defined?
Incremental revenue driver along with expense efficiency enhancer. How is it an incremental revenue driver? Putting things in front of you that you didn't even know you needed or wanted. When you think of the expense efficiency, even like catalogs, can someone else write the descriptions and someone just look it over? I think it does a little bit of both. And we're still in the early innings.
Do you have a single best buy, you and Joe Feldman and the rest of the Telsey advisory group?
There's a bunch of things that we think are interesting these days. Walmart being one of them, TJX being another. A basket, for example, selection of heritage brands that are reinventing themselves with Gap, Urban Outfitters, and Victoria's Secret.
Wow. Is it still e-commerce taking share vis-a-vis? I know it's the omnichannel. You've explained that to us over the years, and I get that. But where are we in terms of just the e-commerce?
E-commerce is growing faster than physical retail, but it's off a smaller base. Physical retail is at least 70 to 80% of total sales.
Really?
The investment in physical retail is better. And you're seeing more modernized stores that have an experience. There's more demand than supply for physical retail space. And you're seeing reinvestment in relocations and new flagships. Look at Aritzia, one of the most exciting stores out there.
It's either Dana Telsey or the President of the United States. It's a tough choice.
Tough call.
You live,
Dana's better
you
radio.
more than anyone I know own 57th Street and 5th Avenue. I mean,
Love
you
it.
just
Thank you.
absolutely the heart and soul of your life. It's popping now, isn't it?
It is popping. It's busy. Those LV trunks don't hurt, given it seems to be one of the most Instagram photos that people are taking in New York.
So that's just not a Christmas thing.
That's because they're redoing the building underneath.
Gotcha. Okay.
But it
All
is
right.
a picture worth taking.
Has Tiffany's worked out? Speaking
Yes.
of, do you see how I segue in this?
Yep.
I got Audrey Hepburn over on Fox Biz. Maria's killing it with the Oliver Goldsmiths. We got to bring it right back to Breakfast at Tiffany's. Did Tiffany work out for the Arnault family?
It did. It did work out for the Arnault family. It got them a bigger place in watches and jewelry, got them great locations, continues to bring them more global
And watches
awareness.
is coming on. I mean, watches is tanked.
Yeah.
And the answers is coming on.
No pun intended on the word tank and watches.
They're
given
in my
Cartier.
ears. Lose Dana and go to Donald Trump. Dana Telsey.
Thank you.
Thank you so much. Really, really appreciate it. Great. I can't say enough about her work with Joe Feldman, as Paul mentioned, from everything that we see in big box out to luxury as well. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
More important, our newspapers with Lisa Mateo.
All right, let's get to the college admission process, okay? So all my daughter's applications are out. We're in the waiting mode, okay? But it's the waiting mode that is the killer for it all. And apparently thousands of students are getting their college decisions faster this year because colleges are using AI to figure out who to admit and who to reject. Okay, so they're using the technology to read essays, review transcripts, things like that.
Okay.
So it could reduce, the wait time. Yes, it could help cut costs. But the whole criticism behind it is that they're worried about bias, like concerns that it could favor a certain type of student, leave disadvantaged groups behind. So the question, do you want AI reading your college transcript?
What I see, and I don't have it in front of me, folks, I'm mouthing off here. The SATs are coming back. The ACTs.
They
They went away
year.
for a touchy feeling. And granted, I'm going to give everybody a massive pass on the pandemic, that we just survived it and all that. But I'm just going to suggest, Lisa, you know what? It didn't work out. They're bringing testing back to see if, the student actually got algebra, or whatever.
So we're waiting to hear. We're in a wait mode.
We are still in
Okay.
wait mode.
All right.
I
All
know.
right.
Some
All
of
right.
them are lagging behind. It is
Okay.
frustrating, but I don't know about the AI going through the essays and stuff. We'll see.
Alrighty.
Okay, so athletic workwear, right? We've been talking about the trend, what people wear to work. It used the athletic wear, the sweatpants and the sneakers, and being comfortable.
Sandals to work.
No, that's your rule.
I've called that out
toes.
many times.
Well, apparently.
I could just see you up in the food court with some poor 26-year-old.
And the guy's like, I got a PhD from MIT. I said, I don't care. Put some shoes on,
He
dude.
points them out. The ones
Yep.
wearing pajamas.
Yeah.
Okay, so the whole point behind this is that there is this shift. Okay, so now there is a shift toward people wearing more sophisticated clothing and work and footwear to the office again. Instead of those, sneaker shoes, they're wearing the real shoes and all that kind of stuff. So they're saying companies like Nike, Adidas, they're all like winners, so they have to adapt to this change now that people are getting back to the nicer clothes in the office.
Okay. Lisa, thank you so much. The newspapers today. Lisa Mateo.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.